What if the West's most powerful financial empire wasn't trying to stop China, but helping it rise? And what if the world's two biggest forces weren't enemies at all, but co-architects of a new world order? Behind closed doors, billions flow from Wall Street to Beijing, as BlackRock, the world's largest asset manager, funnels Western capital into China's future. But this isn't just about money, it's about power, influence, and control. This is the story of how a private American company and a communist superpower quietly joined forces to reshape the global economy without anyone noticing. Welcome to Empire Secrets. In the world of finance, there's a name that doesn't scream power, but quietly controls it: BlackRock. It's not a bank, it's not a government, it doesn't manufacture anything. Yet with over $10 trillion in assets under management, BlackRock is bigger than the GDP of almost every country on Earth. It owns pieces of Apple, Microsoft, Amazon, Google, oil giants, pharmaceutical firms, weapons manufacturers, and nearly every major financial institution in the Western world. But BlackRock's real power isn't just in what it owns, it's in what it can influence. BlackRock doesn't just invest money. It shapes markets, sets trends, moves governments, and rewrites rules. Its financial algorithms can move entire stock indexes. Its lobbying arm whispers in the ears of presidents, prime ministers, and central bankers. And its quiet presence on corporate boards across the globe gives it a say in decisions that affect millions, even billions of lives. But while most people associate BlackRock with Wall Street, few realize just how far its reach extends. In recent years, BlackRock has turned its gaze eastward, to China. And it wasn't a cautious step, it was a full-force entry into one of the most tightly controlled economies in the world. In 2021, BlackRock became the first foreign-owned company allowed to launch a wholly owned mutual fund in China. A historic moment, not just for BlackRock, but for global finance. While other firms were treading carefully around the risks of investing in a state-run economy, BlackRock saw something else: opportunity. China wasn't just a market, it was the future of growth, a billion-person economy in the midst of transformation. Behind the scenes, BlackRock began pouring billions into Chinese companies. It urged its clients, pension funds, insurance companies, sovereign wealth funds, to do the same. In a letter to investors, CEO Larry Fink called China a necessary part of any long-term investment strategy. But this move raised eyebrows in Washington, in Brussels, and even among BlackRock's peers. Because China isn't just another emerging market, it's a geopolitical rival, a surveillance state, and a regime known for controlling information, suppressing dissent, and limiting transparency. So why would the world's most powerful asset manager take such a bold bet on China? And why would China, so often wary of foreign influence, let them in? The answer lies in a quiet alignment of interests. BlackRock wants growth, scale, and first-mover advantage in a vast economy. China wants capital, legitimacy, and access to global markets without giving up control. The result is a strange partnership, a private empire of capital operating inside a state empire of control. But this partnership doesn't exist in press releases or public speeches. It lives in contracts, backroom meetings, quiet lobbying, and opaque portfolios. It exists in the grey space between capitalism and communism, between shareholder profits and state power. And as we'll soon see, this is only the beginning, because BlackRock's expansion into China wasn't just about finance. It was the opening move in a much bigger game, one that could redefine who controls the next global empire. For decades, Wall Street viewed China as both a goldmine and a minefield. The promise of over 1 billion consumers was irresistible, but the risks were enormous. Strict capital controls, opaque regulations, political volatility, and a government that could, at any moment, seize or dismantle foreign influence. Most American firms chose caution. They opened satellite offices, they offered limited products, but they didn't dive in. BlackRock did. In 2020, as COVID-19 rocked global markets and US-China relations sank to new lows, BlackRock made its boldest move yet. It applied for, and was granted, unprecedented access to China's financial markets. The Chinese Communist Party allowed BlackRock to launch a fully foreign-owned mutual fund business in the country, something no Western firm had ever done before. That alone was shocking, but what came next was even more telling. Instead of proceeding quietly, BlackRock went all in. It began launching new investment products tailored to Chinese citizens. It pushed US pension funds and institutional investors to increase their exposure to Chinese markets. Larry Fink, the man behind BlackRock's global vision, openly encouraged stakeholders to treat China not as a risk, but as a core growth engine for the next century. In a world still reeling from geopolitical tension, trade wars, and nationalistic backlash, BlackRock's position was clear. It was betting on China, not as an adversary, not even as a competitor, but as a partner in profit. This wasn't just a financial move, it was a political statement, one that ruffled the feathers on both sides of the Pacific. US lawmakers accused BlackRock of being naively complicit in helping an authoritarian regime access Western capital. Former Trump administration officials called it dangerous. Even President Biden's team expressed concern, launching a review of American investment flows into sensitive Chinese sectors like technology and data. But BlackRock didn't flinch. Its executives doubled down on the narrative. Investing in China was not only good business, it was essential for long-term returns in a slowing Western economy. The Chinese middle class were growing, their financial sector was opening, and the timing, despite appearances, was perfect. On the other hand, Beijing saw value too. For China, BlackRock represented more than just money. It was a symbol of Western validation. If the world's most powerful asset manager trusted the Chinese market, others would follow. It would legitimize China's financial ambitions and help counterbalance its growing isolation from Western governments. And so, both empires found their match. Wall Street found its next gold rush, Beijing found a powerful ally in the West. But beneath the glossy fund brochures and glowing earnings reports, a deeper story was playing out, one about control, compliance, and compromise. Because in order to operate in China, BlackRock had to play by China's rules. That meant adapting its product offerings, working with state-owned financial partners, and avoiding politically sensitive investments. It also meant accepting that China's financial system wasn't built for transparency, but for strategic control. And yet, BlackRock went along with it, because the rewards were too great, and the future too profitable. But that raises a critical question. When a trillion-dollar firm bends its principles to access a trillion-dollar market, who's really in control? The answer might not lie in Wall Street's trading floors, but in Beijing's quiet boardrooms. China doesn't play the game of global finance like the West. It doesn't move fast, it moves strategically. It doesn't chase quarterly profits, it plans by the decade. While Wall Street often acts on impulse, Beijing plays the long game. And in that game, BlackRock isn't just a guest, it's a piece on the board. To understand China's strategy, you have to understand its problem. For years, China was the world's factory. Cheap labor, high exports, rapid industrialization. But that model hit a ceiling. Domestic consumption lagged behind, debt piled up, and geopolitical tensions began closing doors abroad. So China pivoted. It no longer wanted to be the factory, it wanted to be the financial power. Beijing's vision was clear: attract global capital, modernize its financial markets, and internationalize the yuan. But how do you convince the world's most powerful investors to pour money into a tightly controlled, politically opaque economy? You give them access, but only just enough. And that's exactly what China did with BlackRock. By opening the door to a few select players, it sent a message to the world: we're ready, we're safe, you can trust us. But this wasn't generosity, it was strategic infiltration. Because every dollar that flows into China through BlackRock comes with more than just profit. It comes with leverage. That leverage is quiet, almost invisible. It's built on dependencies, on market exposure, on portfolio performances, on political relationships, and slowly it creates a financial ecosystem where China becomes too big to ignore and too entangled to challenge. For example, when BlackRock encourages Western clients to invest in Chinese tech companies, it deepens economic ties. But those tech companies often work closely with the Chinese government, sometimes in surveillance, sometimes in data management, sometimes in military-adjacent sectors. So now, unknowingly, Western pension funds and retirement accounts are indirectly funding the tools of authoritarian power. But it goes even deeper. Through these investment flows, China gains access to global financial data, insights into foreign capital movements, and a deeper understanding of the algorithmic strategies that drive Wall Street decisions. And while American firms analyze China's markets, China is analyzing the firms. In 2022, a quiet regulation passed in China required foreign financial firms to store their data onshore, where Chinese authorities could audit it. That includes BlackRock. The very firm managing trillions globally now houses sensitive market data inside a state-controlled environment. It's like handing the blueprint of your empire to a quiet rival and hoping they don't redraw the map. And China is just getting started. Its sovereign wealth funds have quietly taken minority stakes in foreign corporations, infrastructure projects, and real estate. It uses financial diplomacy through initiatives like the Belt and Road to deepen global debt dependence. And now it's slowly moving to digitalize this control, using financial technology as the next weapon of soft power. So while the West sees opportunity, China sees infiltration. And while Wall Street chases returns, China accumulates leverage. The partnership between BlackRock and China isn't a handshake, it's a web. And once you're in the web, every movement tightens the thread. The question is, does Wall Street realize it's being played, or is it playing the same game? Either way, someone's getting caught, and China is betting it won't be them. On the surface, BlackRock presents itself as a new kind of capitalist force, one driven not just by profit, but by purpose. It champions ESG, environmental, social, and governance investing. The message is clear. BlackRock isn't just building wealth, it's shaping a better world. In letters to CEOs and global forums, Larry Fink speaks about climate action, social justice, and responsible corporate leadership. BlackRock even vows to exit companies that don't meet its ESG standards. It sounds progressive, ethical, almost heroic, but behind the curtain, the numbers tell a different story. While BlackRock promotes clean energy in the West, it holds billions in coal, oil, and gas companies, many of which operate in regions with minimal environmental regulations. And when it comes to China, the double standard becomes hard to ignore. BlackRock has invested heavily in Chinese companies linked to state surveillance, data tracking, fossil fuels, and forced labor regions. Some of these firms have been flagged by human rights organizations, sanctioned by the US government, or banned from federal pension funds. But for BlackRock, China remains too important to exclude. This selective morality isn't new, it's strategic. ESG at its core has become a branding tool, one that appeals to younger investors, institutional partners, and political regulators, while still delivering massive returns from markets that don't play by the same rules. And China knows this. While Western companies scramble to meet ESG benchmarks, China quietly positions itself as climate-friendly, promoting its dominance in solar panels, electric vehicle batteries, and rare earth minerals. But what those glossy reports don't say is that many of these technologies are produced in regions with severe environmental damage, exploitative labor, and data opacity so deep even shareholders can't see the books. BlackRock, of course, knows this, but the narrative must continue. So a new illusion is created. a version of ethical capitalism that looks clean in the West but profits from unregulated East. In fact, many ESG funds that claim to exclude problematic companies still include Chinese state-backed firms, simply reclassified or hidden under secondary index exposure. The average investor, trusting the ESG label, has no idea their money is flowing into firms building surveillance systems, powering coal plants, or enforcing digital censorship. This isn't just hypocrisy, it's systemic deception. The illusion of ethics is maintained not through transparency, but through complexity. Layers and layers of financial instruments, vague ESG definitions, and the absence of global regulatory alignment allow giants like BlackRock to claim moral leadership while quietly fueling the very systems they publicly condemn. And China benefits from all of this illusion. It gets Western capital, green tech validation, and ESG credibility, all without having to change its political system, labor standards, or corporate governance. In this strange alliance, ethics become a commodity, packaged, sold, and traded just like any other asset. And the world buys in, believing they're investing in a better future, when in reality, they're funding a more controlled one. So, the next time you see a fund labeled sustainable or socially responsible, ask yourself, sustainable for whom and responsibility to what? Because when ethics become a marketing strategy and truth becomes optional, we're no longer building a better world. We're just branding the one we already sold. For centuries, the world's most powerful empires were built on control of currency. From Roman denarii to British pounds to US dollars. Whoever controlled the money supply controlled trade, war, and influence. But now, a new battle is unfolding, one without coins, without cash, and without borders. It's the battle for digital finance dominance, and once again, BlackRock and China are at the center of it. BlackRock, always early to shifts in global finance, has aggressively moved into the crypto and digital asset space. In 2023, it filed for one of the first Bitcoin spot ETFs in the US, sending shockwaves through the market. Within months, its move helped legitimize the entire crypto sector, unlocking billions in institutional investment and setting off a chain reaction among competitors. But this wasn't just about Bitcoin. BlackRock is building infrastructure for the tokenized economy, a future where stocks, real estate, debt, and even currencies are represented as digital tokens on blockchain networks. In this world, middlemen vanish, transactions become instant, and whoever controls the platform controls the value. Larry Fink called it the next generation for markets. But while BlackRock builds the rails for a digitized financial future, China is building something far more powerful, a centralized alternative. Meet the Digital Yuan, or the ECNY, China's central bank digital currency. Unlike Bitcoin, it's not decentralized. It's not free from oversight. In fact, it's the opposite, a state-issued, programmable currency designed to give the Chinese government full visibility and control over every transaction made with it. Launched in pilot cities and already embedded in popular Chinese apps like WeChat and Alipay, the ECNY is China's weaponized alternative to the dollar. And it's more than just domestic, it's global. Through its Digital Silk Road initiative, China is quietly exporting its fintech infrastructure to developing nations, offering payment systems, digital wallets, and ECNY compatibility in exchange for influence. By embedding its digital currency into foreign economies, China gains a powerful lever: the ability to track, control, and redirect money at will without firing a shot. This presents a geopolitical nightmare for the West, because while BlackRock and US firms try to innovate within regulatory constraints, China is redefining the rules entirely. It's not hard to imagine a future where China settles its international trade in ECNY, bypassing the dollar entirely, or where authoritarian states adopt Chinese digital finance systems because they come with no strings attached, no sanctions, no transparency requirements, no democratic ideals. In this unfolding digital war, BlackRock finds itself walking a fine line. On one hand, it pushes tokenization and crypto adoption in Western markets. On the other, it maintains deep exposure to China, where digital finance means surveillance, not freedom. What happens when these two visions collide? A decentralized world led by Wall Street's private empires, or a centralized one directed by Beijing's digital state? And more urgently, which one will arrive first, and which will the world choose? Because in this new era, the winner won't be the empire with the biggest army or tallest skyscrapers. It will be the one that owns the code, controls the currency, and sees every transaction. And right now, both BlackRock and China are racing toward that throne. In history, empires were built with conquests, flags, and revolutions. But today's most powerful empire is invisible. It doesn't wear a uniform, it doesn't raise a banner, it doesn't even call itself an empire. It's built through capital flows, index funds, algorithms, and strategic partnerships, all hidden behind the veil of global finance. And in this empire, the most unlikely alliance has quietly formed: BlackRock and China. To the casual observer, they seem like opposites. One is the face of Western capitalism: open markets, shareholder value, privatized power. The other is the icon of state control, central planning, party rule, political obedience. But beneath the surface, they're becoming mirror images of each other, both masters of scale, secrecy, and influence. BlackRock doesn't govern nations, but it can influence the economies of dozens. China doesn't run stock markets, but it can shift the tides of global investment through single-party decisions. And when the two converge, a new model of power emerges. It's not democratic, it's not communist, it's something else entirely: a corporate state fusion, an empire built on economic independence, not ideology. Look closer, and the merger becomes clearer. BlackRock depends on China for access to a billion-person consumer market, high-growth assets, and long-term returns in an aging West. China, in turn, relies on BlackRock for foreign capital, legitimacy in global markets, and indirect influence inside Western financial systems. It's a symbiosis, each one holding the other's weakness, each one feeding the other's strength. It's not a public alliance. There are no formal treaties, no press conferences, no declarations. The merger is silent, executed through quiet deals, overlapping interests, and mutual benefit. But it comes at a price. To operate in China, BlackRock must comply with state demands, from data localization to censorship avoidance. It must align with political narratives, avoid investing in sensitive sectors, and sometimes turn a blind eye to practices it would denounce elsewhere. To court BlackRock and its investors, China must maintain an illusion of openness, offering limited reforms, promising liberalization, and occasionally showcasing market-friendly behavior. But deep down, nothing about its political structure changes. Both sides are performing a delicate balancing act. Each one needs the other, but neither can be seen as dependent. So the alliance remains unspoken, a quiet handshake beneath a global chessboard. And while governments debate tariffs, security, and sanctions, this merger moves forward, because unlike nations, capital doesn't wait for elections. It flows where the conditions are right and the profits are high. What we're witnessing is not competition, it's convergence. Two systems, once seen as opposites, now finding common ground in global finance, digital control, and strategic dominance. But in a world where empires quietly merge without anyone noticing, who's holding them accountable? Who protects the people when power no longer wears a face? Because while the media fixates on diplomatic headlines, the real decisions are being made elsewhere. In rooms with no cameras, by names the public doesn't know. And when the empire that governs your future doesn't need your vote, your opinion, or your permission, that empire is already in control. In the past, power was easy to recognize. It wore a crown, carried a flag, or marched in uniform. But today, the most powerful entities in the world don't govern, they invest. They don't raise armies, they allocate capital. And they don't make speeches, they issue quarterly reports that decide the fate of industries and nations. We're entering a new era, one where the power is not democratic nor autocratic, but financially authoritarian. It's not enforced by force, but by leverage, the kind that comes from trillion-dollar portfolios and centralized digital currencies. It's not declared in parliaments, but through compliance clauses, data regulations, and algorithmic influence. And the two strongest forces shaping this era, BlackRock and China, aren't fighting each other, they're quietly building it together. This isn't the Cold War, there are no missile standoffs or ideological showdowns. It's subtler than that. It's the normalization of control without consent, where markets obey silent masters and citizens become data points in a balance sheet. Imagine a world where your spending behavior is tracked in real time, where your digital wallet can be frozen for non-compliance, where the investment firms decide national policy through passive pressure, where the future of money is programmable and not tied to your freedom but your obedience. In this world, the old structures of governance fade. Voters still vote, parliaments still debate, but the real power sits behind closed doors, between corporate boards, sovereign fund managers, and algorithmic traders. And here's the most dangerous part. It doesn't feel like tyranny. It feels convenient, efficient, profitable. The rise of financial authoritarianism won't come with oppression. It will come with UX upgrades, portfolio gains, and faster transactions. BlackRock's vision of a tokenized world gives corporations the tools to bypass governments. China's vision of a centralized digital currency gives governments the tools to bypass freedom. And when these two models merge, they form something terrifyingly effective, a system that doesn't need violence to control, it just needs your participation. You'll opt in, not because you're forced to, but because it works. And as capital becomes more concentrated, technology becomes more surveillanced, and governments becomes more performative. The question isn't what happens next, it's what's already happening right under our noses. We're watching a new empire rise, not defined by territory, but by data, not led by presidents, but by CEOs, not enforced by law, but by liquidity. And once that empire is built, who do you protest? The algorithm? The portfolio manager? The digital currency code? Because in this new world, control doesn't come from guns or generals. It comes from the quiet, calculated movements of two forces that already control your money, your data, and your choices. BlackRock and China didn't conquer the world, they simply bought it. They didn't storm borders, they didn't wave flags, they didn't ask for permission, and yet today they control your mortgage, your pension, your shopping habits, your digital identity, and the political choices that no longer feel like yours to make. This is not the empire we read about in textbooks. It has no anthem, no capital, no constitution, just capital, pure, invisible capital, managed by algorithms in New York, monitored by data centers in Shenzhen, and growing every second while the rest of the world argues over the past. While nations cling to traditional, this empire builds the future. While democracies debate, it decides. While you scroll, it calculates. And while you sleep, it expands. Because in the end, this isn't just a story about BlackRock or China. It's about us, the silent participants in a global system we never voted for, but can't escape. An empire we funded with every transaction, every investment, every click. And the scariest part, we didn't lose our freedom, we traded it for convenience. If you want to understand how the world really works, not the version you're told, but the one shaping your future behind the scenes, subscribe now to Empire Secrets, because your desire creates your future, but only knowledge builds your empire. Subscribe now, share, wake up. Your desire, your empire.